Welcome to this week's episode. This week marks quite a pivotal moment in my investment journey. I decided to try my chances in making a living out of swing trading. Up until now, swing trading, while being an integral part of my investment strategy, was only used in my self-managed retirement portfolio. I often considered a possibility of swing trading as a substitute to my day job, but never had the cash funds big enough to try. Well, life is giving me this chance now, as I recently lost my employment after 15 years of service. With the payout that I received, I think I can finally dip my toes into deeper waters of swing trading. But first, let's take a look at what happened on the markets and in my stock portfolio this week. Broader markets were mixed, with TSX and Dow Jones finishing negative, while Nasdaq and S&P 500 both finishing positive. Nasdaq was again the biggest winner, with over 3.5% gain on the week, and a whopping nearly 19% gain year to date. AI craze continues to fuel technology market, giving boost to both Nasdaq and S&P 500. Although gains seem to be narrowing to just a handful of stocks, like Nvidia and Apple. How long this craze will continue is hard to tell, but I am taking precautionary measures to reduce my exposure to the overblown technology sector. The biggest loser of the week was TSX, which dropped nearly 1.7%, getting all the way down to 120 SMA on a one-year chart. This is starting to look like the beginning of a summer correction, which I was talking about over the last few episodes. But so far, TSX is the only North American market that is showing the signs of this correction. Nevertheless, I still think the other markets will soon start surrendering some of their gains too. A position in Canadian Western Bank saved my portfolio from following TSX suit. National Bank announced this week that it agreed to pay a hefty premium to acquire Canadian Western Bank, sending its price soaring 70%. One lesson learned here is not to underestimate small caps, as they are usually a great target for mergers and acquisitions, often accompanied by a lucrative premium. But let's get back to my decision to try more aggressive swing trading. I realize that the timing might not be ideal, considering my overall negative short-term outlook for the broader markets. But I also recognize the fact that timing the markets is never an exact science, and it is better to act while implementing some mitigating strategies than not to act at all. After all, as long as the governments keep printing presses running, the stock market prices will continue inflating, just like prices for everything else. Since I am not a day trader, and don't do elaborate charting and timing of hourly or daily swings, I decided to focus on monthly to quarterly patterns. The biggest difference from my long-term investment strategy is that I am going to sacrifice my principle of diversification by limiting my allocation to a maximum of 5 stocks. As a start, I decided to put half of my swing trading funds into my 5 picks and wait until one of them starts moving in the right direction. I will then use the remaining funds to increase my position in this stock and sell most of it once I reach 10% gain. I hope that starting with 5 positions, instead of 1, would help keeping my portfolio more stable from daily price fluctuations to avoid excess anxiety. I don't know for sure whether this approach will work or not, but I want to test it first, as it seems to have less risk and relatively good chances for success from my experience. Here are the stocks that I picked for my aggressive swing trading journey. I decided to make my choices from the stocks that I already own in my self-managed portfolio. I already gained confidence in their fundamentals from my prior research, and I also had a chance to study their chart patterns and feel like I know what to expect. I picked companies that seems to be undervalued and have recently bottomed in their monthly chart patterns. I decided to avoid resource sector, as I consider it one of the most volatile and least predictable. I also decided to avoid growth companies, at least for now, as their volatility is also harder to gauge. If you are an experienced swing trader, please let me know in the comments if you see any fundamental flaws in my approach. Hope to see you next week to find out how my experiment with swing trading is unfolding.